Hey everybody, welcome to another trade review. And yes, today we'll be talking about the 12th of August. Yep, so Happy New Year, guys. As today of recording this video, it's 2nd of January. Yeah, so Happy New Year, guys. Anyway, let's jump right straight into the trade review. And so for 12th of August, okay, so basically it's CPI, and yep, I'm gonna read through a trade journal, then we're gonna just start. Okay, AM minus $31.25. So this is the 15-minute chart, and at the moment we can see a big displacement during the CPI. Yes, and yeah, 1 hour chart, so nothing much, but what I can see right here is that this 15-minute buy side is being cleared. Okay, so if you pull up what buy side is this, so this is probably yesterday Monday's lunchtime buy side. So we cleared buy side already. Okay, so we cleared buy side already, and now on the daily chart, I measured up the quadrants here. Measure up the quadrant of these wicks right here. Okay, here we have wick, measure up the 0.25 level. So one here, and the other one here. You can see we failed to reach for the lower quadrant of this daily C week, and this is basically and right here these three dots is basically, this yellow dot is basically the 28th of July new week opening gap quadrant level, and you can see we stopped there at the upper quadrant of this new week opening gap of 28th July. That's why it didn't reach up to here, and right now looks like we are rejecting lower. We also cleared previous day high as well. Okay, so we pretty much cleared a lot of buy side already. Okay, so basically right now to the upside, does it look like I want to reach for the upside? Yes, if you want to reach for the upside, we're going to reach for the lower quadrant of this daily C wick, then the C wick. Okay, so that's the at the moment for daily chart if you were to reach for the upside. But the moment we cleared some buy side, so some rejection is reasonable. Okay, so this is the 1 minute chart, and this is the RTH. So RTH regular trading hours. So on regular trading hours, we will always have the new opening range gap. So NORG. Okay, NORG, new opening range gap. Okay, so we always measure it as well. And the first 30 minutes during 9:30 to 10 o'clock, we have 70% chance that it's going to reach back down to the CE of it. Okay, so never fade it. So measure up, and yep, there we have it, the new opening range gaps. Okay, and the first fair value gap after the new opening after 9:30 is also very important. So here we have it, so I'm going to draw it open as well. Okay, very nice. Okay, so here I'm saying I'm not going to fade the new opening range gap. So let's see price reach down to it. Say, so here right now is the daily lower Q, which is just now the daily chart there. Feel like we might want to reach up there, but at the moment I'm still not going to discount it. If it reach up there, it's going to reach up there. I'm still sticking to new opening range gap for the first 30 minutes. Okay, so look at this fair value gap. If this fair value gap get fully filled, then we will likely retrace back lower. We will not reach up there. But if it have some unfilled portion, then we're going to reach up here. So right now it's all me looking at the old price action with the current me. Okay, so this is just part of me reviewing my trades. Okay, the moment dollar is pulling lower. Okay, Next check, higher, higher. It's looking pretty positive now. So gun to my head right now is to the upside. But again, we are sticking to the same thing. I want to see how this suspension block, which is here. You can see here we got one volume balance, here we got another volume balance. So volume balance, two volume balance together, we will form a sun. Okay, so guys, let's continue. Yes, right. Bicep here a little bit. And, okay, so we can see bicep is roughly here a little bit. So just a little bit. And then, so we form another bicep here. But at the same time, what we can see is that this is the 28th of July new week opening gap, and this is the quadrants of it. Three. Okay, so basically what we did here is that at the C of it, we had displacement, we had fair value gap, and right now probably looking to the downside. So looking at this 15-minute chart, we cleared buy side, and then we had displacement through the new week opening gap here and through this new day opening gap as well. This is order block. And right now, right here, we have the refined 1 hour to 15-minute fair value gap. So yes, I would enter short in this fair value gap. Okay, this is the 1 minute chart. Okay, let's see. Let me go ahead and see the 15-minute chart first. Okay, so yeah, so I didn't take this trade because the risk was too big. But as you can see, Dow, Nasdaq, S&P also formed the same BC, but dollar also going. It's dollar also the same. So yep, there we go. So here, this would have been a good trade. I mean, because we cleared buy side, we have market structure shift, we have fair value gap, and we have another fair value gap here, which is a displacement here. So this fair value gap is a good entry. So, but if the trade is too big, I would just add here. Yeah, I'll just go in. Like let's say if here 6421 and my stop loss has to be placed at here 6430. So it's like 9 points. It's like a bit too big, right? So I actually can bring it here. Yeah, so I actually can bring it here. Yeah, using the first P&L fair value gap. So this would have been the first nice entry using the first P&L fair value gap, then rejected lower, here form another fair value gap. So right now I would expect price not to even reach above this mean of this order block. Where is the order block? From here to here, you measure the midpoint. Okay, so my stop loss can just play as this 6426 level. So it's just 5 points. I'm going to press short right here. Okay. Is this is a 15-minute chart. We see we cleared buy side. Okay, so if we cleared buy side, where is price likely to reach for? Sell side here. That is super clean. Okay, we cleared buy side here already, and we rejected at the new week opening gap, failing to reach the daily lower quadrant wicks, and right in 954. And this red dot is all the new opening range gaps. Okay. Yep. So these are all new opening range gaps. So we reached the C of it, and we are rejecting up right now. Okay. So, but we cleared buy side, and where and sell side is also cleared little bit, but here we have another sell side. Okay, so on a daily chart, like I said just now, okay, so this is the new opening range gap, these pink dots, and then the daily chart. Going back to the daily chart. Okay, daily chart. This is the quadrant wicks that I'm saying. Okay, so probably bring it back for you guys to see, so you guys know what I'm referring to. So this is the upper lower quadrant wick that price didn't reach for, and this is the new opening range gap. And I always say the first presented fair gap is very important, and so we can see price literally shoot down and touch the price literally shoot down and touch the midpoint of it. Yeah, you can see later. Bam. Oh, it's gonna come. Okay, and then reach the C of the new opening range yet. There to there is a very good trade already. And to be honest, this is a trade that I would take, but then the risk is too big. And at that time in August, I'm not really comfortable trading with that kind of risk yet. So yeah, that's the business. So now let's go back to see where is my first entry. Okay, so so I set a limit order here, and I said that okay, this in this sell side in this fair gap here, I would enter this trade, right, and my stops will be placed at this mean order block, right. So this will mean that I will get stopped out here. So right now, the fact that it did this and it became where it touched back the first presented fair gap. Okay, so that is my mistake. Okay, so next time when there's first presented fair value gap, be patient, wait for price to come up to it, or if I'm going to place stop loss has to be placed above it. Okay, at least above the midpoint of this first presented fair value gap. Okay, so price reach the first presented fair value gap again. So here can be a nice entry. So right now this fair value gap here, okay, me entering short here, yep, it's fine. I think it's okay. Okay, but it's not okay. I'll tell you why it's not okay. Because look at that, dollar is going lower. So that is what to disqualify this trade idea already. Because dollar is going lower. When dollar is going lower, Dow is going higher, Nasdaq is going lower. This is no symmetry at all, guys. So when there's no symmetry at all, we stay sidelines, okay? That is why this trade won't pay now. And that is why I got filled this fair value gap. And the fact that the fair value gap get filled here, right, means what? It's not nice. We like to see fair gap stays unfilled, have some unfilled portion, but look at this right here. Here is fully filled. We don't like that, okay? And look at this. Yeah, that's why we always see intermarket, because intermarket tells us what is going on in the bigger picture. Okay, look at that. Dollar is going lower. Dow is going higher. S&P is inside this fair value gap, where Nasdaq is not inside this fair value gap. So does this look like in symmetry to you? No, we are not. And dollar already disqualified it. Okay. So the fact that this fair gap is being filled fully and I got stopped out already. Yes, I know this trade won't pay out right now already. And price come out to where again? Where again? Here, the first presented fair value gap. So do you guys see how I'm being so impatient on my entries? In a high resistant run kind of place, right? What we will do is we will wait for the best entry. And right now, what I will do is I'm going to measure an implied daily range from here to the sell side that I'm aiming for, which is down here. I see if I can, if we got the 15-minute chart again, I'll show you guys. And I want to see where is this first presented fair gap. And this first presented fair gap is likely to be in the premium. Okay, so got stopped out here. 20 ticks is $25, right? Okay. Okay, so $25, yeah. And you can see now. Okay, what I would do is I would measure here, here, okay, because here is where it starts the displacement. I will measure here to that sell side that I'm aiming for, or the new day opening gap that I'm aiming for lower. And I want to see where we are at in the first presented fair value gap. We are probably have to be at the premium for price to keep going down. Okay, at the same time, okay, it start reaching up to the first presented fair value gap high. So do I like to see this on a bearish thing? No, I don't like. So we are most likely to reach back up here, or reach back up to where actually we are clearing what? We are clearing some minor buy side here to add the new week opening gap low. So new week opening gap acts like magnet, so prices will likely just reach it up. So where can be a small scalp? A small scalp can be from this 11th of August, first fair value gap. Here, this is an immediate rebalance. Okay, and this line is basically the monthly CE wick. Yeah, I know I didn't show you guys here, but this is a monthly CE wick. which is shown in the 11th of August. And look at here, immediate rebalance, beautiful. This is why I call immediate rebalance. And bam, reach up to a new wick opening gap high. So this right here, because we cleared sell side, right? Cleared sell side here, order block, okay? Then immediate balance, then volume imbalance, reaching up to the new wick opening gap here. Yes, so when you understand that all the PD arrays, it makes it easy and all these small scalps can be found. And what we always say, right, when sell side cleared the first inversion, the first CB will act as inversion fair value gap. So how do we treat the inversion fair value gap? We wait for the price to close above it, candles closing above it here, then volume imbalance here, price trade into it, bam, I'm going in long here. And here we also got the 1 hour refined to 15-minute fair value gap, 708. Okay, I'm gonna show you guys where do I get this refined fair value gap. It's on the 15-minute chart. Okay, okay. So this 1 hour refined fair value gap is 1 hour refined to 15-minute. This CB right here, why is that? Because if you see how price bodies stay inside, rejection. Trade through it, came here, rejection, don't all the way down. Then here cleared buy side again, and right now we right cleared buy side again, and here held it as support. So right now this is why I see this 1 hour refined to 15-minute CB. And right now I draw the sell side here, but what I'm going to do, right, we can pull a 15-minute implied daily range from here down to this new opening gap. And we can see the midpoint, the first fair gap is in the premium. Okay, and this 1 hour refined fair gap that I entered just now is in the discount. You can see. Okay, later we'll go back and see. I popped the entry right at the high of the first presented fair value, right at the high of this refined one on the 15-minute. Okay, that's where I enter my limit order, and that's why I got stopped out because it is in the discount of this implied dealing range, and we rejected off the new opening range gap CE here. So this is not what we like to see, right? So likely what will make us reach for the sell side easily? If I want to see if price trade down to here, it has to have a body close below it in 1 minute, then only we'll reach it down to the sell side. That is the likely case. Or either the lowest hanging fruit is reached down to this new day opening gap. Okay. Okay, so we are most likely going to reach for the buy side right now at the moment. So there we go. So there we go. See, Nasdaq form a lower high here. Nasdaq form a lower high here at the first presented fair the gap when S&P form a higher high, when Dow is higher high as well, and dollar is not looking anything. Okay, might look like you want to be bearish at this inversion fair value gap, but S&P is always the one that is the leading one. Okay, so if we're gonna go to the upside and we see S&P make a higher high when Nasdaq make a lower high, that means that S&P is probably more firm in a sense. Okay, but I also want to see the lows. So S&P here form a lower low. Okay, so let's see what Nasdaq forms. Okay, right now this is the 15-minute chart. We came down all the way to fill up a big fair value gap here. Okay, and right now we are coming back up. So look at this wick here. Here we have a wick, right? We want to see the CE of this wick. I want to measure this. Measure the midpoint of it. Okay, more clean here, but we cleared buy side. Where is still alive right now? Where? Here. We got some sell side right here. So right now we got sell side right here. Here we cleared some sell side already. Really cleared some sell side here. Okay, let's see here. We cleared some sell side. Went up a bit. Shallow clean the buy side. Come down. Cleared some sell side again. Spool up. Cleared the buy side. This big candle is doing CPI. And then right now, where is clean, where is safe, sell side, but at the same time on the daily chart To the upside, what do we have on daily chart? To the upside, we have is that daily C wick, right? Okay, so this is the 5-minute chart, and we can see we have a small fair value gap here. We got the 5-minute fair value gap here, and if I eyeball it and just measure it here like this, probably a C of it is roughly here. Okay, and then so the first period fair value gap we traded up above it. Why? To fill into this 5-minute CV. So right now on 5-minute chart, it's already everything is already saying okay, you want to go lower, we can go lower right now. And here we also can measure this CE wick of this 5-minute roughly here. Okay, you measure here and here to get the midpoint of it. So right now price may come up here, and I want to see rejection it to go lower. And here we got a volume balance as well, so all those are going to be important things. See, okay, 6430 is the CE of the 5-minute CB. Okay, so 6430.5, and the high comes in 6430.25. Okay, so which is one thing, which means does it show firmness? Okay, that was what I'm asking myself. And so, but in the 5-minute chart, it's price traded into a CB, but on 1-minute chart, we have did it multiple times, so cleared minor buy side already. So right now, if it wants to go lower, it really should go lower. And what we want to see is that price literally use this as inversion fair value gap now. Okay, which we will wait for this candle. If it closes below the BC, then we're gonna pop and pop, go lower. Okay, so that's why I record all my trades. I record my trades, then looking back, it's just like me seeing the live price action. And with the me now, what do I see and what will I do better? All these things. So yeah, so this is not what we want to see. See, it didn't add its inversion fair value gap. So we might want to clear out this buy side again, and we'll see if we can close above the midpoint. Because see, midpoint first present fair value gap, bodies is still closing below it right here. If we can close above the midpoint of it, then I will see these three as order blocks to reach higher to clear the buy side. Okay, right now dollars pulling higher, all higher, forming higher lows. Higher highs, and S&P also forming a higher high. With dollars pulling higher also, so there's no symmetry. This is when you should stay sidelines. Okay. So, but right now, gun to my head, just like what I say, we are probably going to reach up to the buy side here. Okay. So we form a fair value gap here. Okay, this fair value gap here combined with this CE wick right here, that's a very strong indication. CE wick right here. So if price reach here, we can put a long entry here, but we have two fair value gap. But right now, I don't want price to even reach below the midpoint of the first presented fair value gap. Okay, but first, because we had a high resistance, stop loss will be placed like somewhere here. Okay. Yep. So this 15-minute CE wick. Okay, we're gonna go 1 minute and see what we get. So this is the 1 minute fair value gap. Here is the 15-minute CE wick, and we're probably gonna reach down into it with this CE wick. Price to really touch it, and right now I would want price to like touch back the new wick opening gap of the 28th July one and start sending it higher. By my journal, I said there is high resistance, vertical AM session. To answer that question why, let's just have a look at the Google Keep Note. Okay. Say so 12 is Tuesday. So we only had CPI. So after CPI, it's okay, but the big events occur over. And tomorrow we have another Thursday have another big event. So okay, so right now we reached up to the lower quadrant of this new opening gap. Spools lower. Right now I want to see price bodies have to stay above it. Probably don't stay above this. Okay. Yep. Then right now we're gonna see it to start looking to the sell side again. Okay. So that's why when it's 50-50, we do nothing. Okay, so price literally came down all the way through this order block. Okay, and if you measure this midpoint here, midpoint of the first unit failure gap, we would roughly get, I don't know if they did it touch it, but never mind. Okay, so right now this is seen as an order block. Okay, why? Because this order block coincides with the lower quadrant of this 28th of July new week opening gap, so I'm seeing this as an order block. So here, be a long here, and then stop loss will be placed right at here. It has to be placed right at here. Okay, and I'm just seeing this as an order block right now. Okay, because this is a high probability order block if it is nesting effect coinciding with all the new week opening gaps quadrants or any fair gap quadrants. So let's see. Okay, right here we can go along. Okay, yep, just let me I go along there and see dollar is going lower, looking good, looking good, or higher lower, higher low, also higher low. Okay, let's go. So right now I want to see draw the midpoint of this order block, and I wouldn't want price to even reach below the midpoint, and so I would here, let's say here is midpoint, here is lower quadrant, so my slots will be right here. So right where I put it here, yes, that is where I'll keep it. Okay, okay, very nice. So what I did here, I draw the quadrants and my stop loss is just below the lower quadrant. Okay, so very good. So it should really pop higher right now. And I want to see price just start spooling above here, not support. Bodies have to close above this inversion BC right now and act as inversion failure gap for it to go support to reach higher again. And all this red lump right here, all this I'm seeing it as propulsion blocks. Okay, if as soon as price will go above, close above it, I'm going to see a propulsion block to reach higher. And propulsion block is what? Order block, then the next order block that form is a propulsion block. And propulsion block, we want to see it not being traded into half of it, okay, the mean of it. Okay, bodies haven't closed above it, so we want to see bodies closing above it, then only the order block will be valid. Okay, bodies have to close above this, bodies or price have to go one tick above to change the state of delivery, but now it haven't yet. Okay, so still doing really nicely, but Dow is pulling lower. Nasdaq still looking strong, which is good. We don't look at Dow, okay, we look at Nasdaq, and I want to see how dollar react in this fair gap. Ideally I wanted to see it like this and go lower. Okay, but S&P is not forming that higher high. Nasdaq formed that higher high though. Okay, not looking very nice. Okay, so that is the cue. That is the cue for me. I don't like it already. My stop loss is placed here, remember. Look how ugly price action is, guys. This is the euro buy side here, we clear sell side already. Try it again. So this is the 4 hour chart, and 4 hour chart we cleared buy side displacement. We got very clean sell side here. Right now we are trading inside this fair gap, which bodies had been trading above it. Here attempted one more time, come lower. And here we have another, here actually we have a small fair value gap. Okay, so right now looks like you want to reach up there. Okay, so yeah, so here we have a 4 minute CB right here. And right now the fact price rejected up to upper quadrant and rejection lower. So right now we're going to see how it's going to act react at all the new opening gap quadrants. It should really just start spooling higher, not rejecting. It should really start closing up. Because look how sloppy it is. But it's holding up at the first presented fair value gap. Look at that. Bodies is respecting the first presented fair value gap. I know it's a lot of things, but you can see here the 12th of August, first presented fair value gap, which is today's one. Okay. So this trade is so ugly. The next time it trades here, it has to close above it. It has to. This candle have to do it. 1050 macro is coming. 5 minutes more 1050 macro. So this may be just time distortion right now. It's fine. Right now my stop loss is just placed below. My stop loss will just put below this swing low here. Okay. And I want to see how I want to see support at all these quadrant levels, especially lower quadrant. Okay, very nice, very nice. Right now, let's go back. See, okay, nice. We close above the CE of it. Right now, I want to see do we close above it, because if we close above it, if we can close above the CE of this inversion fair gap, we are going to start seeing price smash up to the buy side here. Nice, nice. Okay, right now, okay, right now, actually when it's trade low here, we can go long. We can go long. Okay. Right now my stop loss, I'm going to shift my stop loss to here. Okay. Actually this right here, I'm seeing this as an order block because this coincide with the inversion fair value gap low. So that is how we pick the right order blocks. If it form a fair value gap, we can go in this fair value gap right now. I think I'll enter. Yeah. See, I entered this fair value gap. Good job. Okay, let's see. Do we get filled? Oh, sadly we didn't get filled. Let's see, when did I place the limit order? Okay, yeah, I placed it, but we didn't get filled. Anyway, I should put one tick above the inversion fair gap C, because if we are bullish, we don't like to see price even tap into it. Most of the time it won't lah, if it's really bullish already. And right here, we can see that it is really super bullish. Why? Okay, two things. First of all, look at this fair gap. This fair gap is the balanced price between kind of fair gap. Bodies and bodies overlapping. Yeah, this is some more advanced thing a bit. So this fair gap is not likely to be reached, especially 1050 macro already. We are in the time. And also what did I say just now? If we see a bodies closing above the inversion fair value gap, CBC here, we're gonna see it spool up big moves to the buy side. So we don't like the midpoint of it to be reached. That's why if next time I enter, I'm gonna put one tick above the inversion fair value gap here. And my stop loss, I'm just gonna put it right here. I'm gonna make it very aggressive stop loss, because I don't even expect price to even come back now. Because what I'm expecting to see is price to just touch a bit, or even don't touch it like what we're seeing now, and it's going to start spooling higher to the lower quadrant and to the new week opening gap high, and maybe to the daily CE week high that I've been saying just now. You know, let's see what time is it right now. 15:20. Okay, so 15:20. I'll bring it back to the daily CE week so you guys know what I'm talking about. Okay, this right here is what I'm talking about. Okay. Okay, so this right here is what I'm talking about. This daily C week 6451.75, 6443.5 is the daily upper quadrant. Okay, so let's go back 1520. Okay, so that is the business. But look at Nasdaq. Nasdaq still not moving. Nasdaq is stuck in the range, ugly as F. Dow form a higher high, and Dow and S&P is pretty much in symmetry, but this is not the strongest one to see. I want to see what dollar is doing. Okay, and dollar is not spooling up, so we are fine. Okay, and we shall see where we get filled. Hmm. And there we go. There we go. That's what you're seeing. So next time, what I will do is I would just pull up one tick above this fair because I see this kind of fair gap, I know it's not going to be filled. High likely chance it's not going to be filled, especially when we are in a time macro, we are in a 10-50 macro prices. It's ready to start spooling. Okay. So and this fair gap, because body and body is overlapping, this is a balanced price range within the sub 1 minute. That means on maybe 30 second, 15 second. Oh, it's balanced price range here. Okay, that's why overlapping, overlapping, overlapping. So this fair gap not being filled. Right now, my stop loss normally here, I'm just going and I see this reaction right here. What I'm going to do, I'm just going to pull my stop loss to break even straight away right now. And I want to see it spool up here, which starts spooling up to this daily lower Q, lower quadrant, and that would be first partial will be taken off, and I'm gonna sorry, my stop loss won't be trailed here now. My stop loss will be trailed to just break even or just little bit down break even. And after we pass the daily quadrant level, my stop loss will be placed at break even plus cover commission cost. And I want to see, does it want to fill up to the 4-hour CB here and the daily CB. Very nice. So here, bam, we reach here 6443. And let's say we long at here 6437.7. Let's say we long at 6437.25. So 37 to 43, there is like 6 points. Good scout. Wait, that's why you wait for 10-15 macro. Beautiful. So right now, yep, we shall see. Want to see this fair gap? Okay. Okay, and then we're probably gonna get stopped out. And there we go. Stop out or break even. Reach the lower quadrant, daily lower quadrant, and that would be it for me. So yeah, sadly we didn't got filled here, but it's okay. So right now we cleared buy side again. At daily quadrant rate, we got some rejection. So see this fair value gap. Right now we are looking at this area here to here. This area is balanced price range. I want to see this portion stay unfilled. This portion of CB has to stay unfilled because here is balanced price range. Then we're going to see it start pulling lower to sell side. It is the 1 minute chart. Look more cleanly. Fair value gap. So this is the venom because see we cleared buy side, bodies over it. Have a fair value gap hovering through this fair value gap, inversion fair value gap. So right now what we're gonna do is body close below. Okay, I'm just gonna pop the short here because after buy side is clear, usually price will spool lower one. Okay, but no, we create a higher high and traded low towards where? Towards that fair value gap, 1 minute, then only going higher. So right now what I'm going to expect, what I want to see is price to spool up to the 4-hour CB. Okay, because the fact that it didn't fully fill here, bodies respecting the C of the BC, that is all good sign. So right now it should start spooling higher. Okay, right now it should start spooling higher, and dollar is pulling lower as well. Good sign. Good sign. We are in symmetry now, guys. So I wanted to enter another trade here. Will I enter this trade here? Okay, so Dow's pulling lower. Dollar went down clear sell side. Okay, so what I'm measuring right here. If I measure this price and this price leg, what do we have, guys? We have the upper quadrant level, and usually upper quadrant level is the area that price should just spoon up. But do we see reaction here? No. So if I want to go long, I have to go long where only at discount or below. Okay, so if I go long here, it's not high probability at all. Okay, so no, this is where I'm wrong. I will never go long here. Okay, because if I go long here, it's already so close to the target, right? Like look at that. And I'm not taking at the lowest fruit hanging fruit objective, which is the 4 hour CB here. Anyway, my stop loss, yeah, stop loss is just very small, but it should really start pulling higher, because if it don't, then no, we don't like it already. Especially here, my stop loss will just be pulled to this. My stop loss just have to just be kept here, right? And no, I won't like this trade already. And then so what? Yeah, it did came down. Maybe this is a immediate rebalance on a higher time frame here to here. But right now, let's say, okay, so yep, I pull my stop loss up too fast already. Okay, too fast. Too fast. That's why I got stopped out. Okay, too fast. I pull my stop loss up too fast. At least after we form a new swing high, then I pull stop loss here, fine. But not when it's doing this. Okay, so this I see as an immediate rebalance. Or maybe there's some gaps being filled. So right now, I want to start seeing price reach up here to the daily CE week. And only after we go above this high, my stop loss will be put below this swing low. Okay, okay, nice. When this happens, yes, now my stop loss is gonna be placed where? My stop loss is gonna be placed to this swing low right here. Okay, my stop loss is gonna be placed to this swing low right here. Or even this order block below mean, that means here. Also no problem. Yeah, I can place my stop loss right here. Let's just place it right here. Okay, right now I want to see it pull up to the daily CE right here, because it's so close, it's gonna come. Okay, right now stop loss, I'm gonna pull it up to just right here, just below that BC. Okay, so that's why I got stopped out. So just the two trades, and that's basically it. Looks like it didn't reach for the CE week, and basically that's the story. Here, what I just take, it's just, guys, it's just one tick above it. Yes, I will just take here, because wanting price to reach there means I'm seeking for perfection. Okay, so that's it, guys. Ugh. It's 17. Good job. I'll see you guys in the next one. Bye. Yeah, so guys, welcome to another trade review. And today, two trades and lost $31.5. So basically, today I hesitated to close the trade. So as you can see, I entered. So as you can see, I entered the trade at that CB, and I entered at the area that allows me 5 handle stop loss. Okay, so at the early AM session, 9:30 until 10 o'clock, we have a really nice trade back lower into the CE of the new opening range gap, but I didn't press any trades because the risk was too big. So I just take with it, I studied it, and it was just a really low resistance, really nice. Then after that, you can see the mid session from maybe 10, from maybe 10:20 onwards until like 10:40, it's like literally just chopped. So yeah, about the trade that I took the trade, and as soon as it closed above that CB that I used to enter, right, that means the trade has lost the plot. And I felt uncomfortable, so I told myself, I was thinking, okay, I should close this trade because it had lost the plot. It has closed above the CB. But then, there's a part of me inside thinking that, wait, I should just submit to the stop loss.
So this is really one thing that I just had a thinking, really one thing that submitting to the stop loss even though when you know you're wrong, that is literally wrong, okay? But yeah, I just told myself submit to the stop loss. So I remember ICT was saying like, you know what's funny about trading? When you are in a win, when the trade is in profits, right? You have the balls to hold it longer. If you have no balls to hold it, that means you really want to you start feeling nervous, you want to get out of the trade faster. But when the trade is not in your favor, you will tell yourself, it's okay, I'm just gonna hold it, it's okay, no problem, I'm just gonna submit to it. But it's harder to submit to a take profit than to submit to your stop loss. So yeah, so basically bodies close above that CB80, then I was looking at the volume balance. And as soon as you traced into it, so that was the first Q and that was the best time to exit the trade, which means the trade is still in green. Then I would have saved my stop loss, which have still cover commission cost and would still be in a profit trade. And then we rejected at the volume balance, we closed above it. So at the very next candle, if I did not hesitate to just close the trade, I would have saved half of my stop loss. That means 5 point stop loss, I would save half of it, a little more than half of it. The stop loss would be just 2.25 points. That's why the more you hesitate, the more you lose. And I've been trading for quite a few times the end. Every time I'm still hesitating to close the trade. Anyway, today it was just high resistance. Then later at 10:50 macro, okay, because on the daily chart you can see it was just really clear. Okay, it was just really clear that the upper quadrant and the CE wick of the daily wick, I was aiming for that. Okay, and 15-minute we closed above the 15-minute CB, and that was the green light for it. Okay, that was the green light for me to start aiming higher prices, and we closed above the 15-minute CE wick as well. So those two were the green light for me to start aiming higher prices, because basically we retraced into the 1 hour BC, then we started just popping higher. And basically on the daily chart also looks bullish. So remember, high time frame is parallel to low time frame. So I should just submit to the high time frame, and on the 15-minute chart I must see like bullish scenarios. That means as soon as we close above the CB, that we have bodies closing below it. Then as soon as we close above it, okay, that was the green sign that okay, we're gonna start moving higher. And during the 10:50 macro, I did have a trade idea and I did execute it on it, but then price just wouldn't feel me. And everything was just as I expected. I said we had this 1 minute BC that was holding price below it, holding price resistance all the way. Then I said as soon as we close above the CE of that BC, we will start running higher to the daily to clear the buy side, as well as the upper quadrant of the daily, lower quadrant of the daily wick. That was my trade idea. As you can see, I typed it out, and basically it did what I wanted to. I put my long limit order, but I just wasn't filled because price just stopped dead right there and just shoots higher. Offered the upper quadrant of the wicks, offered the target in like 2 minutes. Then later price retraced back down into that BC that I wanted to enter, but this time I wasn't feeling uncomfortable with the trade because what I see already painted out. But basically price is allowed to retrace because it reached the lower quadrant of the daily wick, so it's allowed to retrace first before going higher. So it did so, retraced into the BC and it went higher. Yeah, I didn't enter the trade, but what do I feel? I feel okay, no problem, because I'm studying. Yeah, I'm just studying. Then later I was expecting institutional order flow entry drill, okay, IOFED, because dollar had a really clean, very difficult low there, so it was all in symmetry and it is time for it to spool. So yeah, I entered the trade, limit order, but then I trailed my stop loss too early. So it's because ICT always say 3 PD arrays for a trade idea. So basically the 3 PD arrays is the 28th of July, new week opening at high, the BC there is to enter, and the CB inversion fair value gap. And as you can see, I trailed my stop loss a bit too early, too fast, not believing, trusting that there is 3 PD arrays there. And that's why I got stopped out. And price literally just bumped into the inversion CB and bam, higher into the target I was aiming for, offering me the 18 ticks, which hypothetically, if I win it, it will make me end up in a break-even day. But you know what? It's okay, no problem. So the total loss today, just $31.25, and that's it. No problem. Just overall, it wasn't really low resistance. Like I traded when everything was unclear. Like there was the 1 hours BC below that. There was the 15-minute CB. So things was really unclear. So what can I do next time is to be see bullish. I want to see on the 15-minute chart it is showing bullish reaction also. Not expecting it to act as like something. That means if it's bullish and there is CBs that is holding bodies like today's case, I will want to see a bodies close above that CB, then only I will start expecting higher prices. Okay, so this is one realization that I'm gonna do. And basically, yeah, still hesitating to close the trade when you lost the plot. So come on Ian, don't hesitate. Okay. Basically that's about it. Nothing else about the trades. Other than that, yeah, 1050 macro, really beautiful trade. During that macro time, you can see we were just in symmetry, beautiful. Dollar, beautiful, really difficult lows, and that is what make the whole trade in symmetry and bam. So yeah, that's it. That's it for today's review, guys. I'll see you guys in the next one. Trading is all about managing my risk. Yes, I'm gonna do it. I'm gonna make it one day. I'm not gonna give up. Okay? I'm not gonna give up.